Hey guys, what is up? Fabio here. Hope you guys are all doing well and welcome to this new video. So in today's video, I'm going to be doing a trade breakdown on my pound yen short, which banks me approximately 150 pips. So enjoy this video. I'm going to be showcasing my entry, my stop loss, my take profit, and I'm going to be showcasing the confluences that I had in order to take this trade. Okay guys, so in order to understand the short that I took, we just have to pop up in towards the monthly time frame. So what I saw on the monthly time frame, and remember guys, I do not really use trend lines to my, let me put it this way, advantage. Only on, let's say, the weekly and the monthly do I really take trend lines into consideration. For the rest, I just purely use them for trend line breaks. So in this particular situation on the monthly time frame, we had a 1, a 2, and then over here a third trend line touch. So I was expecting some potential further downside from that third trend line touch on the monthly time frame. Furthermore, if we look at the monthly time frame, we are located in this area of supply over here, and that was the reason why I was looking for potential more downside. So a monthly third trend line touch and a monthly area of supply. So now looking at the daily time frame, what could we see over there? Well, on the daily time frame, and I'm just going to clean up my chart and remove the monthly stuff. On the daily time frame, we could obviously see essentially that we were in a bullish trend, right? Because over here we had the swing high gets broken, a new higher high gets formed, and we are essentially bullish, with this being over here the ultimate swing low. But in this particular situation, I would focus on this low over here, as this is kind of your uptrend. So from this low to this high, to this low, to that high, and now we're waiting for a new higher low to get formed. But where was that higher low going to get formed? Well, I mainly use areas of supply and demand to anticipate on where the next level or that next higher low was going to be formed. So for me, this was my area of demand over here, and as you guys can see over here, we had a very obvious area of support and resistance. So this is essentially where retail traders are going long. So in my mind, we still had a lot of room to move down in towards this area of demand for really seeing a push up higher. So remember guys, my vision or my main confluence is just always look at what retail traders are doing and kind of try and do the opposite. So in this particular situation on the daily time frame, I was waiting for the market to move down lower in towards that daily area of demand. So now looking at the 4-hour time frame, what could we see? Well, on the 4-hour time frame, essentially what was happening is that we had swing structure. So we had a downtrend structure, first of all, from here to here, 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 here. So lower lows, lower low, lower high potentially, and then you're expecting a new lower low to get formed. So this was the swing low and this was the swing high. So everything in between is just a pullback. So over here, what I saw at the time was that we hadn't yet broken the low, right? So we hadn't yet broken this low, which meant that we still could have seen a push down lower to form that new potential lower low before then once again seeing a pullback up higher. So what I was anticipating was that push lower. And now it's kind of like up to you to look and try and identify internal market structure to see where the next lower high is going to be formed, which could potentially push price down lower. So on the 4-hour time frame, I identified the internal structure being bearish over here. So low, lower low, low, or excuse me, high, lower high, and this potentially being the next and new lower high. Then in addition to that, I knew that we had liquidity located over here in the form of supply. We tapped in towards supply, however, I missed that initial entry. So now on the 1-hour time frame, I was looking for some potential shorts. I drew in my fib. So first of all, this was my first fib, this was my second fib, and what I knew was that price was rejecting that 0.88 and that we could definitely see some more downside. Well, what I then do is I use trend lines as additional confluence just to spot out where liquidity lies, because as you guys know, I like looking for liquidity underneath trend lines, as what you'll often see is that the market kind of hunts for liquidity underneath those trend lines. So what I was seeing over here was a very obvious trend line, and I know that every single time we kind of like reject that trend line, people are going to be going long as retail traders, right? So what I knew was that, okay, well, I want to take a short position at least a position which will run in towards the lows, and for instance this low underneath the trend line. So knowing that 4-hour internal structure was bearish, the higher time frame also had potential to move down lower. What I was then doing was looking for internal areas of liquidity. So for me, what I had drawn on was this trend line once again over here as well. And upon that trend line break over there, potentially somewhere over here, I think my entry was around, yeah, over here, I was looking for those shorts with my stops above the high on the 0.88 fib. And essentially what I was doing was I was initially targeting the lows over here, with my second target being the swing low at around the 0 fib. So what we could see is that the position initially went into some profit, however then rejected that trend line. Wasn't really too stressed about it because I knew, okay, well, the market can still start moving down lower and grab liquidity underneath that trend line, and my stop loss is in a pretty safe space. So just waiting for the market to move. What you can then see is that, okay, look over here, we came in towards that trend line once again. We see a bullish reaction. However, the bullish reaction and the bullish candle then fails and we start breaking down lower. So we grab some liquidity underneath that trend line, then we reverse up higher once again, but then the real dump commences and essentially TP1 got hit, and at the end of the day also TP2. So yeah, great trade in my opinion. You're really looking at what liquidity was doing. So the main confluences were of course higher time frame structure, fib structure, supply and demand, and essentially just spotting liquidity which lies underneath the trend lines. So yeah, if you want to learn how to trade with me, make sure to check out the link in the description down below. There's also a link to my free Discord channel over there where you can ask any questions that you have. So yeah, I hope you guys enjoyed this video once again. Wish you all a fantastic day and thank you for tuning in.